And so another way to think of it is this video representation here. And I give this credit to Bitcoin Times here, but basically what you have is Bitcoin, its constant rate, and everything else, S&P 500 and real estate and gold and all these other currencies here down towards the bottom, they're all depreciating against Bitcoin. You have a finite system here. You have a closed loop of energy, and you have an infinite amount of supply in all these other systems. And so inevitably, their value is going to trend downwards forever. If we skip forward here a little bit.
I'm gonna sound like a broken record in this video, but most people think that Bitcoin is volatile. But in reality, if you look at that chart he just showed, which was freaking amazing, in real times, in comparison to Bitcoin, that they're the one that are volatile and losing value. Bitcoin chart goes up and to the right when you have dollar as a denominator. But then when you flip it and put Bitcoin as a denominator, everything else is going down and to the right, and everything's volatile. I mean, look at that chart again. You got the S&P 500, the U.S. Real estate, gold, silver, all the other currencies. Put anything, any commodity, anything against Bitcoin, and that chart will look the exact same.
They continue to go down, and the longer you go, the farther they go, because the more and more supply you can create, because these are open systems versus the single closed system that we have been able to create. And see, what happens is that people are looking from within these systems here outwards towards Bitcoin, and they see this thing that is skyrocketing, and they see volatility in Bitcoin. When reality is the volatility is in all these assets, and that's the distinction that people don't make, and we'll get back to that in just a moment. But basically, people don't understand it yet. People think Bitcoin's energy usage is a bad thing, when hopefully I'm making clear that its usage is a good thing. It is a feature. You need a system that requires energy, and it requires energy input into it for that energy to be stored. It can't create energy out of thin air. It's a feature, not a bug. Energy usage is essential for Bitcoin. Finite supply is essential. If you have an infinite supply, then you have an open system and you have an energy leak in the system. Volatility is inevitable in such a takeover. Again, if we're to compare this, if you're comparing a finite system versus an infinite system, it is always going to be volatile, and the exchange rate is always going to be volatile. It's inherent, because all these things, even though in relation to each other, you don't compare the blue line versus the red line versus the green line, these things aren't as volatile with each other as compared to Bitcoin, because Bitcoin is flat. All these things track with each other, but Bitcoin is in its entirely own league, and so that's why the volatility looks different. It's always going to be that way. Bitcoin will always appear volatile because the system in which we are looking outwards from is inherently volatile. It's also a feature, not a bug, that's outside human control. You can't have humans or a state or a company or a centralized board control this, because if you give humans control, we will corrupt it. Human emotion and a desire for short-term stability will always trump our desire for long-term security.
Humans will always corrupt stuff, just like the Constitution. And that's the exact reason, guys, I don't buy cryptos. They're controlled by humans. CFOs, CEOs, investors, board of directors, employees, etc. It's all corruptible. You know what I mean? They got CEOs. Bitcoin is the only thing in the world that is not corruptible, and no human being runs it. It's ran by the system. No government, no state, nothing can control. No country, no company controls Bitcoin, which makes it unconfiscatable, which I love.
Now, what's going to happen here is that most will have to reset to zero for the new system to emerge, in the same way that the Industrial Revolution, 90% of people were farmers, and then, they all had to leave their jobs on the farm to go into industry and into factories, which was an improvement in their lives. It was safer and more prosperous, and it paid better and everything. The reality is that they had to go to zero first, and they had to learn an entirely new career, an entirely new set of skills, and their entire worldview changed, because you go from being on a farm into a factory. And so the unfortunate reality is that most won't get out in time, and most won't transition until it's already happened. But again, everyone will be better in the new system, whether they realize it or not. And so going up forever sounds insane, because we've never seen a closed system here. And there's a clip we'll get to that manifests that statement pretty well. People think that it's possible to recreate Bitcoin, but this is not. This appears to date not to be possible. There have been thousands of attempts to recreate Bitcoin over the last 40 years. There were dozens of attempts before Bitcoin to make it, and they all failed. They all failed because they were trying to create energy out of thin air, and they weren't obeying the thermodynamic nature of the system that it required. And I am pretty sure, and it appears to me and most Bitcoiners, that it's impossible to improve, or it's at least very, very difficult to improve. Again, if you're talking about something that is in metaphorical orbit here, where there is no decay within the system or no energy loss within the system, when compared to everything else, I don't know if you can improve upon that much more. If you can get a spacecraft to orbit, I don't know how much better you can improve on it already getting to orbit. It seems that Bitcoin is it, and that we're not going to be able to replicate it. In the same way with the Mona Lisa, if you create a copy of the Mona Lisa, you don't double the supply of Mona Lisas, you simply create an inferior replica that only emphasizes the original beauty and the original uniqueness of the original. And so even if somebody recreated Bitcoin today exactly perfectly, I don't think it could survive. We've seen other examples, Bitcoin Cash, Bitcoin Satoshi Vision, and Litecoin, and all sorts of other attempts to recreate Bitcoin, and they've all failed. They've all crashed 99% against Bitcoin, and it seems that they're not stopping anytime soon.
Better known as ship coins, ladies and gentlemen, but they call it something else. There's about 20-something thousand alt coins, they call them. And what that means is it's short for alternative to Bitcoin. They've all tried it and they've all failed. Matthew Crater has an absolute great video about this, the immaculate conception of Bitcoin. And I did a reaction to that, so check that out. But yeah, you can't make Bitcoin again, man.
Basically, with the double spend problem that I was referring to earlier, and the fraud baked into the system, Bitcoin solves the double spend problem. When fiat is the double spend problem, cash, USD or whatever your local currency is, that is the double spend problem. Well, Bitcoin is the antidote to the double spend problem. These are inherently contradictory systems. Bitcoin solves the problem of creating a system that retains its energy in a thermodynamic sense, that works in a form of energy, a form of money, and a form of weapons, and nothing else succeeds in this. Gold does not succeed in this. Other materials and metals do not succeed in this. Real estate does not succeed in this. And so instead of living in a world akin to today, where you have cash declining faster than the decline of cost of prosperity, and having us chase yield through a mixed basket, a diversified portfolio of investments to catch up, instead, the future world, what it will look like is everyone just has a share in a global computer system of information and energy storage that has finite units, while everything else, all the assets and all everything else we were referring to earlier in these old slides, continue to go to zero forever. And so the old paradigm, aka the current paradigm, is a world where money goes down, okay, the value of money goes down, and the value of assets go up. Stocks seemingly go up forever because the value of money is going down. They're not increasing that much over the money, but it seems that they are in nominal terms because the value of currencies is going down so very much. So instead of living in the world today where the value of money goes down and forces asset prices to go up, which therefore means we hold assets for savings, and we diversify our trust in a mixed basket of assets, and indices of stocks or a variety of bonds, or however you diversify your portfolio. Instead of that old paradigm, we're entering a new paradigm where the money increases in value over time, because instead of having an infinite supply, it's a finite supply, which it's complete opposite in that it forces asset prices to go down, which means instead of diversifying your time and your economic purchasing power across assets, you're holding money for savings instead of holding assets for savings. And instead of having to trust a variety of people, whether they're central bankers or CEOs or regulatory institutions or whatever they are, you can simply verify. You can run your own node, your own miners and your own computers, and verify the network, and that, yes, everything is all transactions are legitimate, there is no double spend problem, and the system is finite. And the more people that do that, the more secure the system becomes, and it's a vicious feedback loop. But basically, this is the transition we're looking at here. Instead of money going down and assets going up forever, we're looking at money going up and assets going down forever. See, this makes perfect sense to people. People say stocks go up forever, real estate goes up forever, all these things go up forever, and the only thing that's changing is that instead of money going down forever and assets going up forever, now we have a system that can create finite supply in which the money goes up and the assets go down forever. And so the basic way to put this in a simple couple sentences here is that infinite money is fighting technology to make assets more finite. You know, we have houses drive off the market. You know, when you have infinite money, you are incentivized to have assets become more finite because it forces prices to go up and preserve credit for as long as possible. Where if you have a finite money, aka Bitcoin, it compounds the rate of technological growth to make infinite assets.
Now, if you understand that, you get it. Now, if you don't, go back and watch it. But this is the paradigm shift I was referring to, ladies and gentlemen. And you, my brothers and sisters watching this, are way ahead of the game looking at this video and taking action. You are so early. Oh my God, you're so early.
And this is really important to understand because since Bitcoin, if Bitcoin survives everything else going to zero, and it seems that there's no realistic way to destroy it, that means that the rate of technological change is just going to get faster and faster, because as we have a technologically native system that reinforces the rate of technological expansion, it means that the rate of fraud in the old system, in the cash system, where there's an increasing amount of supply, only has to get worse. It means inflation has to get worse. All these things have to get worse over time. And so people will fight it. It will be it will be extremely resisted and tested against society, and it already is. But the important thing to understand and to emphasize here again is that, you know, again, using the black hole metaphor, you can kill a planet by throwing a brute force physical cost at it. You know, say I were to throw an asteroid at a planet at a quarter of the speed of light, you know, I would destroy the planet. It would completely obliterate it. But if you do that to a black hole, it just absorbs your mass and energy. You know, where if you take stocks and bonds and other assets like cash or gold, and you throw energy at it, you can corrupt them. You can, you know, this is the honeypot problem. This is a Cantillon effect. These are all these economic realities that if you throw energy at it, you can eventually distort it to where it's detached from reality. But if you throw hash power at Bitcoin, you try to censor it, you try to stop it, all you're doing is you're throwing more energy at it and you're making it stronger. You know, that's the significance of an open versus a closed system. If you throw energy at an open system, you just make the leak bigger. If you throw energy at a closed system, it just continues to bounce around within that system forever and reinforce the strength and the value and the energy within that system. And understanding that, this difference between open and closed energy and monetary systems is the great threat and opportunity of this century, in my opinion.
I love that black hole analogy. My God, that is so awesome.
And this should be exciting because it means, you know, if all these wonderful indicators of prosperity are going to zero, it means that life will become more prosperous in the future for far cheaper in ways that we can't even fathom. But the reality is that it probably will be brutal. There will be extreme switching costs. You know, again, think of when people went from farmers to industry, or even think of our own lifetimes with the internet. You know, any company that did not adopt the internet died. Any country or any individual that did not adopt the internet has not been able to keep up. There are real switching costs, and that's the whole reason why I'm making this video and talking about it. We'll resist it until the very final moment, and unfortunately, that's not going to be a good idea. For most people here. And so a good way to think about it is comparing the locomotive to the horse, and that none of us want the horse because all of our economic interests are in maintaining the horse. We want to see our asset prices go up forever. We don't want to believe that Bitcoin is an existential threat. However, that's the reality. It is an existential threat, and it's coming whether we like it or not. We can try to race our horse against it and pat ourselves on the back and think that, you know, it's just a silly fad that's going to go away, but that's not the reality of what's going on here.
That was me in the beginning. I was the guy with the horse when I was only stacking precious metals and gold and stuff, and Bitcoin was the train. I just knew I just didn't want to accept it. I just, you know, and most of you guys are in the same boat right now. You're looking at this video and you're like, man, this is some BS. I got my metals, because that's all you know. It's the precious metals versus the fiat currencies, which is not even close, by the way. Of course, precious metals are much more better than fiat currency. We know that. And when you're stuck buying precious metals and you know, doing your thing with them and melting them and doing all this stuff like the old horse people were doing, you know, they raised horses, they fed them, and all of a sudden this new thing comes out, this new shiny thing, and like, wait a minute, this can't be better than my precious metals, because riding a horse is better than walking, aka the fiat currency. The fiat currency is walking, and your precious metal is the horse. But this train My God. All I'm telling you guys is don't be the person that's like that just gets stuck on the horse and never wants to go anywhere, because you're going to buy Bitcoin whether you like it or not. It's just at what price you're going to buy Bitcoin.
Because we have a hard time of understanding new tech. And it's not going to be a competition because, again, if we come back to open versus closed systems, we can't understand how Bitcoin fits within the current system, which is an open system or a series of open systems, because it doesn't fit. It is a closed system. We've not seen anything like it before. To give another metaphor here, this is one I really like, is if you have a bunch of ships with different sizes of leaks, that's basically the world we're in today. You have a diversified portfolio of assets because all these assets have different pros and cons. They have different rates of decay. They have different degrees to which entropy is coming after them and attacking them and eroding them. Again, for example, cash is eroding faster than stocks, and gold erodes slower than, say, bonds, for example. It is easier to increase the supply of cash or bonds versus real estate or stocks or gold, and that's why these assets tend to go up in price against those other assets. But if you have all these ships with leaks, they're all going to sink. They're all going to continue going down. Even if real estate prices go up in terms against the U.S. dollar, the real purchasing power of real estate continues to go down because technology gets better and they become more affordable as our technology becomes more efficient and our availability to use energy becomes more efficient. But if you have one ship among all these ships, if you just have one ship with zero leaks, with zero energy loss, that is thermodynamically sound and is a closed system where there's no water entering the system, that means it is the only ship worth being on. All these 99 ships will, sink at different rates. Maybe some sink in seconds, and others take hours, and others take years. But the end result is the same. They're all going down. They're all going to zero against this one ship. And so once you realize that Bitcoin doesn't fit within the current system, once you realize that this is the only ship worth being on because it's the only finite thing we have, you abandon whichever system you view as inferior, which, in my opinion, are all of these 99 ships.
That's a funny analogy because I used to be in the military about the sinking ship. I used to be in the Navy. But I have abandoned all those ships, okay? All of them. I have nothing on paper at all. Because to me, it's just a complete waste of time. The only thing that I have not abandoned is these kind of metals right here outside of Bitcoin. As far as a store of value, I do have some income producing assets. I do put some cash into things that make me more cash so I can buy two things. So I can buy Bitcoin and this kind of precious metals. You know what I mean? That's it. I don't have anything on paper. None of that stuff, man. I got Bitcoin and these kind of precious metals.
And so, it's important to emphasize here that Bitcoin's adoption rate is 80% faster than the internet. We're already 14 years in. People say, oh, the internet took 30 years, say from 1990 to 2020. And so Bitcoin will probably take 30 years too. And I agree with that. But the problem is we're already 14 years in. Bitcoin's already 14 years old. Its hash rate is near an all-time high. Addresses and its distribution are at all-time highs. All the metrics of the network are growing and improving. And the only reason people think it's dead is because they're trading it like a tech stock. They are trading this one ship like the other 99 ships because they don't understand it yet. And if you think about it objectively, it does make no sense. These people are trading Bitcoin like a tech stock, which has a board and it has a marketing plan, it has a product market fit, it has all these things that Bitcoin doesn't have. Bitcoin isn't a stock, it isn't a company, it doesn't have anything to sell you, it doesn't have any yield, it's not trying to make profits, it just is a series of ones and zeros convertible for energy through the proof of work consensus of the system. And so it is absurd to me that people trade Bitcoin like a tech stock, and that's going to be viewed as something completely ludicrous by future generations and future people, because that's basically like selling off trains because stagecoach valuations are down. Stagecoach valuations basically metaphorically here being like tech stocks or things like that, and you're selling off trains because this isn't. It's comparing apples and oranges. It makes absolutely no sense at all.
That is so funny. The reason why there's a lot of reasons why, but the reason why people trade Bitcoin like a stock is because the lamestream media makes you think it's a stock. They put it on the charts and everything and compare it to other things. You got precious metal people talking about it. people that are traders, people that are outside the Bitcoin community haven't took the time to study it. They just think it's something to buy at 30,000 and trade at 60,000. And you can make money like that short term, but the problem is they have no idea what they're selling. You know what I mean? It's like selling a Johnson Matthey bar. You get that Johnson Matthey bar on paper or whatever. You know it's worth 3,500 or $4,000 or whatever, but you bought it for 100, then you sold it for 200. Oh, I made $100. You know what I mean? You don't know the intrinsic value of it. You know, and I tell my friends and family all the time, you guys got to stop doing that. If you're going to buy Bitcoin, hold it and trade something else to make some money so you can buy more Bitcoin.